Good morning and welcome back to another pipeline trading video. Today I'm just going to cover some generic stuff, what's going on. There was some big news that the UAE is leaving OPEC, which should actually, I'll go into it, but it could be positive for oil prices going down. But at the same time, the departure will likely lead to higher long-term oil production from the UAE, potentially decreasing the influence of OPEC and mitigating long-term price spikes. But it creates significant short-term uncertainty, which could drive prices higher, which is what I was looking at when I said the charts are showing that oil could go to 120. I don't know if it's going to go there, but we're going to find out shortly, right? So I don't like making videos unless there's truly something to speak about. That's why I haven't done one in a few days. And because I'm not really seeing anything that is out of the ordinary, everything's playing out. So if we go to the SPY and the QQQs, which is the S&P and the NASDAQ, it's pretty much chop right now. We're holding up pretty well, but I mean, you see the target zones that I have in. I'm looking for a pullback with support on one of the major moving averages. And typically, I would like to see the 20 or 50-day hold support before continuing up. And if we break that, as you can see, there's a lot of orders down here in the blue. So that's one thing on where I don't like to try and predict where the market's going. And make an investment saying, okay, we're here, it's holding, this is going to go higher. You don't want to do that. You will get burned every single time. Let it tell you, let it confirm, stay level-headed, especially that we're in a news-driven market. So if we go to Intel, because that was one of the trade ideas, and I said it had to hold VWAP, it's most likely going to pull back. You can see with the RSI, we're oversold. So for me, not to say that it can't keep going higher, one of the big things that, the gap and go that I was talking about, this most likely is going to fill its gap. It's not continuing. They're going to fill this gap. And then maybe it will touch the 9 or 20-day moving average before it makes its next leg higher. One thing I want to point out on what makes me very uncomfortable, if we go to their last earnings, they reported 13.67 billion. And if we go to these earnings recently, it was actually less than that by a little. So yeah, they beat. But, and I'm not taking away from their earnings. Their earnings were good. They're getting back on track. But the market's priced in something from the past. Like we just made a massive, massive high. That is not something I want to chase. If anything, I would be looking at the first candle. Like these are doji candles. Those are, what we could see right here, and watch the volume, right? Remember what I was saying, in a bullish market, prices rise means volume should rise. Price falls, volume should fall. So keep an eye out for that, because if we start to see prices fall and volume rise, that's not good. That means that we could be in a distribution phase, and that's not something that you want to get caught in. So I'm going to leave that. But right now, to me, this is overbought. Especially comparing the earnings from the past, like if you go back here when we were at 41.73, their earnings were their revenue was 13.65 billion. Well, and I went back 2 earnings ago. So for me, I think you're going to see anywhere from the 60s and down in price again. So I would be looking at a setup to short this and wait for it to get exhausted. Maybe it's going to get some more liquidity, might get a little bit more of a run up with some news. But you're seeing even the moving average, we touched, we bounced. This right here keep an eye on because there's a lot of liquidity down here in the low 60s. So that's where I would expect this gap to get filled. And it doesn't happen in one shot. It's not going to be one candle. This is the hourly, but you can see it's exhausted, right? Price went up, volume rise. Price went up, volume rise. Price went up, volume did not go up. So that's a bit of a red flag for me because right now you would want to be seeing a massive spike in volume, and we're not getting that. Tesla, it's pretty much close to the same place that we were. We did get above this breakdown because it's essentially a descending wedge, which, if you remember, last year we did that and we chopped. Look, so we chopped from May of 25 to September. That's how long we had sideways action and then broke out and made its leg. And that's why I'm looking down here is where I would be a player to take her out on a date because that's a greater risk reward for me. At least if I get in a little early, I could do call options. I could sell call options. I could do a few other things. That's why I say this is educational. This is not financial advice. How I trade and what I do, um, it's different than other people. There's so many different strategies out there, but at the same time, I have a lot more of a risk tolerance than the average person because of my past and what I've been through. So for me, it's very different. And then also, too, it all depends on what level you're at because I use different instruments and derivatives to hedge and get myself out of things if it's not working out well. And this one got me by surprise. We just saw the semiconductors, but this is a bit deceiving because if you go look up this ETF, you're going to see the biggest names like Taiwan Semiconductors and Broadcom and NVIDIA. Like those are the ones that are propping this up in a massive way. So be careful holding this for the long term, and it has actually outperformed, but I wouldn't be an enthusiastic buyer at these levels. I said that in the past and I'm saying it again. This is another one of my short plays that I'm looking at, watching closely. We're getting the first red weekly candle, but what's interesting is look it up, but we got the first red candle yesterday. So first red candle, this means that we could get a bounce up, but most likely we are coming back down probably to, I would say around the 450 range. And if it breaks that, we're going to come right back down and eventually we're going to go to below 400. That's what I'm thinking. Do I know when? Absolutely not. But if you look, the fear and greed, this got really greedy, really, really greedy. And we know what Buffett says, right? Be fearful when others are greedy. Be greedy when others are fearful, which you don't need to be greedy, but that's where you get what he's saying. And what else can I cover? I'll go over Bitcoin. Bitcoin's not doing anything. It's still in the channel. We broke out of the descending trend, which is bullish. But at the same time, we're still in this bear flag. And if you go back to weeks, I think even a month ago, I talked about an 80 to 84 price target that it could go to before making its next leg down. So I've been saying that we're in a bearish flag. I do expect prices to go a lot lower. But again, I don't know when. So if you're going to trade this, make sure you're trading it tight. You want to go long on these. This is a channel. And if you look at this channel and go back to when we had that massive drop in February, if you're not aware of the channel and what this formation is, this is how you get wrecked. Plain and simple. Because right now a lot of people are getting bullish. We have no idea what's coming for crypto and all the same old stories. And keep in mind, I do think Bitcoin over a 4-year, 3-year period is going to do really well. But we're talking about what are the levels that you would want to be a player. And again, I wouldn't in the environment, in the market making new highs, and the semiconductor ETFs at historical high, everything, yeah, we might get a blow off top. We might, but I'm not trading or investing on we might. I would only do it if it continues to hold and we got out of this. And I think I said in the last video where this bear flag would actually be void is if we were to break above the 98,000 level. If we were to break above here, pull back, hold support, and go, that's different. So a break above, the 90, this level right here, a break above this, a pull back to 85 as support, then I would say, yeah, this could go to 120, make a new high, and may or may not. It also could be like 2021. We had a massive pullback. Everybody thought it was going to make a new all-time high, and we're going because that was the first time Bitcoin went to, I think, 67, 68,000. She pulled back, and then what did she do? She went back to 67, 68,000, and all those buyers had to hold for years. Now, what a lot of people don't realize, it's easy to say, well, yeah, if it just pulled back again, I would just average down and buy more. It's a little bit of hogwash because that would take a lot of balls to do, especially thinking how much conviction you had that it was going to make an all-time new high at one, like just as an example, if it went to 116 and people start barreling in, this is it, it's going to 150, 200, and they're 100% convinced, and it doesn't, that is going to be in the back of your mind the entire way down. And then when you should be buying and averaging down, because by the time you were to buy here as an example, and it were to go back to 120, let's say 2 years from now, you just broke even. So if you didn't buy here, you're not making that, that 2x or 3x or whatever it is. So don't be arrogant. Don't be ignorant. History always repeats itself. And ignorance is the biggest evil of this world. Remember that. There's so many things that happen throughout history, people not listening to other people, seeing things, the writings on the wall, and they're just so confident. They're so ignorant. They don't want to learn. And then it repeats. The patterns repeat. And I wanted to talk about BMNR because that's something that I've been trading for quite some time. It's a good chunk of my portfolio just because of the volatility. I like it. And when I trade certain names like BMNR or Tesla or Hive or Intel, all these things, I like to focus on things that I'm familiar with because I'm remembering what they did at certain prices and why they were doing them. So if you write those notes down, it kind of gives you an idea like, okay, here's what the market was thinking. Remember, the market is always like a fair value gap is just basically the inefficiencies in the market. What made them go to that price and why is what is being priced in. So if you remember the past and where they were and what they were doing and why they were doing them, it just gives you more conviction to feel more comfortable on taking that trade or making that investment, whatever your time horizon is 1, 2, 3, 6. So I do a bit of everything. I do a bit of intraday. But lately, right now in this market, I haven't needed to. So I'm more or less just doing call options, managing my portfolio, making sure that my risk management is proper so I don't blow up. And this is one that I'll talk about. If you remember, I think it was 2 weeks ago, I did a video. Go check it out. I was talking about how I was selling covered calls right about here. And I was using BMNU. And BMNU was, I changed this, but it was about close to this area, $2.33 a share. And I said, I could be early because the 10 went above the 20. Price isn't above the 50, so it's still bearish to me. But there was a gap. I wasn't going to really hold on to the fact that there's the gap and I could have made an extra 15 cents. But there's always a spread when you're dealing with options, and these spreads are super volatile. That's why I said learn the Greeks, because when you understand implied volatility, the implied volatility can be 100 to 300%, meaning for every move that BMNU or BMNR makes by a dollar, that the options contract will fluctuate 100 or 150, 200%. So it's a very big deal. But what people like to ignore is they think, well, I have time left in the contract. I'm going to hold this to see, because I have conviction that it's going to hit a certain price. And that's the big mistake that people make. When you get a massive run like we did, right? My option contracts were paying 55 cents. At the time of the video, I believe my option contract was up 10%. I'm going to show you in today's video. I took a screenshot. I'm not showing you how many shares or any of that stuff, but I'm going to show you the percentage because today it is at 57.4% from 10 from when I made that video. And that was around this time. So April 14th. So in a 2-week period, you're talking 5 times it's increased. So wrap your head around that one. But these are the things that I would, there's a video I made on options and selling call options and covered calls, selling cash secure puts. Go check those videos out because they're just educational. It's just to give you a real scope of how I've done things. And the returns have worked out phenomenal. And it changed my life when I understood how options worked because it's intimidating. But I would encourage you to get as many books as you can. There's so much material out there. There's podcasts. There's people way better than me and what I do. The information's out there. So definitely go and learn it. It doesn't hurt. It doesn't mean that you have to do it. But what you can also do is start writing things down. Say, hey, I was going to take this option with this strike price, with this expiration when the stock was at my level, and then monitor it on paper and just get comfortable with that. And the more you see, log your win rates. How many times was I correct? How many times was I in profit? And the one thing I would advise you, and I should take that back because it's not financial advice, the one thing I would make you mindful of is when these option contracts move and they move big in your favor, take the profit. Do not hold them to expiration because of your conviction. If you're up double digits, don't be a greedy, you know what? Take the money and wait for your next setup because that's going to be compounded growth. And that's where your account will start to grow. And for me, I can't afford to do that because I have a family to support. And that's one of the things that I've learned most. There's so many times I've had such conviction on a price where I was up 200-300% on trades and didn't cash out. Now, knowing what I know today, I could have kept them because they still did well over the long term, but I would have been able to at least make money, almost all of it, and still hold the position pretty much for free. So basically, my investments are on the house at that point just by learning how to sell call options or hedging. There's straddles, there's spreads, there's so many things that you can do that will actually give you way better risk management and give you more comfort psychologically because when you are making the profit and you are up a bit, the fear of loss doesn't kick in. And that's another thing. When we talk about the psychology of the markets and we talk about a fear of loss, That's where some of the biggest, if you look in the financial markets and the biggest scams and the biggest sales and the biggest, storytelling, it's always a fear of missing out. And then when people have things, it's a fear of loss. How can I make up for my loss? And that's where the damage is done. And there's people out there that know this. Salesmen know this. I was in sales. That's something you get people to react off of, is their emotion. And that's what makes the markets. That is why I love doing what I'm doing. I don't like the sales part because a lot of sales are deceptive in many ways, especially in the financial markets. But when you're looking at this, you can almost see the stories in the news come out after the move has already been made. No one's going to go on TV and tell you their playbook. That's why they're billionaires and they're the elite and we're not. That's how they roll. That's the game that they play. So try not to get caught up in that. Do what's best for you. Understand who you are as an individual, what your risk parameters are, what you're comfortable with, and then make your life simple. This shouldn't be you waking up, drinking Red Bull, bouncing off the walls to trade your day. And then when you lose or you make it, it's like either you're having a really great day or you're throwing things and throwing a tantrum and disrupting your whole home because of a bad trade that you made. You don't want to be that. You don't want to do that. Those people always implode. It's gambling. So keep that in mind. Anybody I know that's done trading or gave up or lost a lot of money, it's always the same story. They have the stories where they're up and they're making money, and then the greed always kicks in. And then they think they're invincible. And you see this in business a lot. You see a lot of great companies that are out there and they get these ego power trips on they're invincible. And the thing with the markets, and I said this in the last video, is the markets will always humble you. The moment you think you're beating the market, it's like the casinos, the house always wins. So that's why they want to keep you in the game longer, because they know that over a longer period of time, you're going to go off of emotion. You're going to get a few bad hands, and then you're going to start trying to make up for your losses because you're like, oh my gosh, I was up 10 grand. Now I'm up only 8. I need to make the other 2. And then by the end of the night, they're negative 10 grand. So keep that in mind, guys. If you found this interesting or it helped you or gave you, any insight to what I'm doing and why, and I'm going to post on BMNU the actual percentage so you can see that I'm not just telling you, I'm going to show you what it looks like. Hit the subscribe button, hit the notification, stay up to date, support the channel as much as you can. Like I said, this is a passion of mine. I love doing what I'm doing, and any support is greatly appreciated. As always, stay disciplined, trade with intention, and God bless you all.